Hi everyone. Check, check, check. Hi everyone.
Test.
Oh,
Can you guys
some
at the back
familiar
hear me?
faces here.
All good? Does it sound good at the back? Can I have some thumbs up? Okay, awesome. So we're gonna start right into the panel discussion. Today we have the pleasure, of three good panelists: Kylie, Vishal from 500 Startups, and Paul from Ematic Solutions. So I'm going to leave it to them to introduce themselves. I'm Daryl from E27, and I'm going to be moderating today's panel discussion. Let's start with Paul.
All right.
Yeah.
Hi, I'm Paul Tenney, founder CEO of Ematic Solutions. In case anybody's wondering about my accent, I'm actually a former American, so I don't care. I'm Singaporean now. So Ematic Solutions is a Singapore headquartered startup. We focus on artificial intelligence solutions in the email marketing space. I guess just to give, I'm not sure where everybody's at here, but we're a 500 startups investee company, so that might make for some interesting conversations here. So yeah, I'll pass it along. I think.
Hey, former American, did Trump already win yet? I was like,
he won.
I was about to ask him whether that's the reason that you mentioned that you are a former American?
Already saw it coming.
How's the US dollar price right now? Like,
I don't want to.
Oh man.
I don't want to think about it.
Oh man. Maybe we need to remark our entire portfolio. Anyways, yeah. So I'm Kylie, managing partner at 500 Startups, and then along with Vishal, we lead the Southeast Asia investments.
I'd usually say that, I'm not sure if this is working.
Actually, I don't think this is working.
I'd usually say that 500 Startups is a Silicon Valley-based venture capital firm that invests globally, but we're now going to say that 500 Startups is a Southeast Asian-based venture capital fund that invests globally and happens to have, unfortunately, a presence in Silicon Valley as well. We lead the investment for Southeast Asia.
Yeah, okay, so I just want to have a show of hands of the people I have in this room. How many of you guys are startup founders? Okay, that's a majority, that's good. Get to grill them later. Any investors? So Siganovate, Street Venture, some friends. Okay, great. So the topic that we have today, is looking for the next breed after Mao Shan Wang. So as you guys know, the Southeast Asian fund is the 500 Durians. So perhaps this doesn't come out in the media. So perhaps you can share a little bit more about the story behind why Durians. Yeah.
Okay. Can you guys hear me if I talk like this? No, Okay, maybe we need to retry the mics again.
Test.
Oh yeah, a little bit better, I think.
Okay.
Why don't we amp it up? Why don't you jack it up? No, sorry. Okay. Does this work for people at the back? Alright, cool. Alright. So the question of what's the story behind 500 Durians as a name or what?
As a name, yeah.
Okay, so a bit of context for some of the folks who may not have this context. So 500 Startups is a Silicon Valley-based firm. It's founded by Dave McClure, kind of ex-PayPal mafia type person back in 2010. So he was working with Peter Thiel at Founders Fund at the time, doing all the seed check investing for Peter. And he discovered that actually the seed check investing strategy that he developed at Founders Fund was returning about 60x of Peter Thiel's money. And then now with Twilio's IPO, it's probably up about 100+x of the money that he was dedicated towards. So I thought, hey, this is a really good strategy. Why not we create a whole firm based on this strategy of a large portfolio seed check investing? And so that became 500 Startups. As 500 Startups progressed, they started to see a lot of opportunity internationally, and became one of the earlier firms from Silicon Valley to cut a lot of American money into frontier markets, emerging markets, right, at the time. India before India became kind of really hot and so on and so forth. And from that, it started generating a lot of returns. So when we first started looking at Southeast Asia, I had volunteered myself as a mentor at the accelerator. It was only batch 5, only the 5th batch. Right now they've done close to 20 batches already, but I was batch 5 at the time. And they had already invested in Southeast Asia. Dave used to come down to Haji Lane to kind of smoke shisha with founders. Still, shisha was banned now, right? Yeah, so he's not coming here anymore. So he was lucky enough to get into Viki, for example, and a few other companies. And so Viki very quickly returned $200 million of total exit value back. So he was a big fan of Southeast Asia. So I said, okay, let's just do Southeast Asia in a big way. So we decided to launch a micro fund to accommodate local investors. So at least local investors feel they can invest in a locally focused vehicle instead of a globally spread one. And for naming conventions, we always wanted to lead with a name which has some kind of local slant to it. So as we explore all kinds of local names, you realize number one that ASEAN doesn't really have an ASEAN identity. The only thing ASEAN really has is this ASEAN organization, but that's kind of more G to G kind of thing. However, one thing that most of the countries will claim as their own is durian as a fruit. So every country you visit is like, oh, have you tried durian? Durian's our national fruit. And I'm like, oh, okay, well, okay. Then you go to Thailand, they say the same thing. You go to Singapore, you go to Malaysia, you go to Indonesia, hey, have you tried durian, right? And so we're like, okay, maybe there's something we all can agree on is that everyone thinks durian is their own fruit. So let's just go with that name. It's also pretty obnoxious and spiky and strange, right? Like a lot of the people at 500, so we thought, okay, let's do that. And so that became 500 Durians Fund 1. And I think, Daryl, what you're talking about is the Fund 2, which we've recently announced after we completed investing the entirety of Fund 1.
Yeah, so I think that's a great story, talks about the localization and, some of the characteristics of Southeast Asia. And I believe much has happened, since the announcement of Fund 1. So it grew from, US 10 million initially to US 25 million. Both Kylie and Vishal have seen 120 companies, including Imatic. So, is there any indication of Fund 1's performance? And, who are some of the Maoshan Wangs or who are some of the gems in the portfolio? Is Imatic one of them?
Okay, so to give you a very nuanced answer about this, right? Because we've been investing across 24 months, not all the investments happen at the same time. We didn't put 120 checks out in week 1. So each company has its own story. They grow at different time, at different pace. Some of the earlier winners we see are all coming from the first batch of companies that we invested in. First 20 companies we invested in. And those happen to be the companies who raise money the fastest. It doesn't mean they're the biggest company or may return the biggest returns or have the biggest exits. They just happen to raise the most money the fastest. So most, like if you look at unicorns, for example, the global unicorn list, right, out of the 100 plus unicorns, most of them are 6 to 7 years old. And a lot of people forget that. They think of Instagram as a 2-year-old company being $1 billion and so on and so forth, but most of the unicorns are 6 to 7 years old. So for a lot of the founders in the room who think they can kind of do a very quick exit or a kind of quick path to this, sometimes you got to put in a bit more years than you think. So as a result, indicators of who are the biggest companies, most exciting companies, we have to look at it that way. We have to have a long-term view. We have to have a very nuanced view of what a win is. But that being said, the more popular companies we invested in, Grab, earlier check in Grab, Carousel, Bukalapak out of Indonesia, those are some of the big names which come around. But like I said, there are a lot of companies similar to Imatic, right, which are really strong companies with very strong prospects, and we continue to look for these companies and not just the big, sexy, hyped-up ones as well. Some of the stats I think we can share is that out of 119 checks in total, 34 till date has, I think it's 34, Series A? It's 36 or 34? 30-ish, okay, 30-ish, right, Series A. Series A, from seed to Series A. Yeah, and so one unicorn, which is Grab, and then we've got 4 companies, 100 million plus and above, and the rest of them all fall somewhere in between. We'd like to think these are very good indicators that we've got a very strong fund going, and a lot of our investors seem to think the same way, which is why Fund 2 has a lot of support for that reason.
I'm being very cautious of what we say about the fund's performance because our legal counsel for Southeast Asia is here to keep us in check. So, if I'm not mistaken, another way to look at it is 48 of the 119 companies in our portfolio have raised follow-on financing after we've invested. So that's a good sign. And I mean, we don't expect everyone to raise follow-on financing, but as you go on and as the companies progress in their growth, fewer will get those fundings, but the early signs are quite promising so far.
I think, Daryl, it's also important for all of us to have a view of not to celebrate success too early as well.
Yeah.
Only because all we're saying is that a lot of the 500 Durians companies, as well as most of the companies ecosystem will raise money, they are financed to what I call die another day. It's just that they're not going to die today. They may die later, right? Or they may get sold for lower amounts and investors might not get their money back, which happens sometimes. I think it's been happening quite recently as well. These things all are expected to happen. So we all need to have kind of a very, we're bullish, aggressive, we're optimistic, but all these things should not surprise us. right? That a lot of companies who have raised money, it only means they're gonna die another day. They may die another day. Right? Doesn't mean they've won.
Okay, awesome. I think it's kind of rare, right, to have a session like this where we have an investor and a portfolio company of the same investor. So, since there are so many startups and startup founders in the audience, right, what was it in Ematic that you guys saw and decided to invest in them?
I guess I passed the mic back.
Next one's going to you, Paul.
I'll tell you generally and then very specifically to Ematic, right? So generally speaking, 500 likes a lot of transactional kind of companies. What I mean by transactional is that money is actually being made. There is a real customer who wants to pay some money for a service or for a product that's delivered. Sometimes we'll go for less transactional companies with less revenue upfront. Sometimes we go for marketplaces like Carousel and so forth. But for the most part, we're a big fan of transactional companies. We like it when customers pay a lot of money for the service and they come back to use it and they rave about it. Now for Ematic, it was a very easy decision to make when we invested in Ematic, because when we saw the deck and we got introduced to the deal, I think Casper was instrumental in putting the deal together. I looked at it, I kind of understand the space personally, a bit about the space personally, about email marketing and how challenging it is. And I saw that they listed Grab and a few other companies as customers. So first thing I did, I didn't talk to him first, I talked to Grab first. And I called them out, I called Cheryl, the head of marketing, and said, hey, do you use Ematic? She says, yes. Do you pay for it? She says, yes. Are they good? Really good. Totally recommend them. Helped us with XYZ, everything, amazing company, completely recommend it. So for me, it's like, okay, that's like a good sign, right? Then after when we engaged Ematic, the price was right, the founder is solid, everything makes sense, he's got a really kind of good view on things, and we're like, all right, let's do the deal. Yeah, so I think that's, to give you the specific story, it's a bit more like that.
Sure, but I hope you guys are taking notes, because they, like they mentioned, you just raised a fund too, so if you guys are, in a similar business, that's something for you to take note of. And Paul, you're up next. So, a bit of context on Ematic. They raised their seed round, US 1.1 million last December, so congratulations to Paul, one of the investors being 500 Startups. So maybe you could just share a little bit about the journey and what was 500 Startups' role, because I believe there were other investors involved as well, right? Convergence and some other guys.
Yeah, is that on? Okay. Yeah, so, I think everybody realizes that email marketing is probably one of the sexiest businesses on the planet. So, it's just pretty much a cakewalk getting some initial investment in. We, I guess, decided we were initially a friends and family funded company early on. Then we actually became, for a brief period of time, a profitable company, which don't ever do that if you're a startup. But we did build sort of a real business first, and the journey to go start doing some institutional fundraising started in August of 2014. We were looking at the bank account, thinking it's time to go top this up a little bit so we can grow a bit faster. So I didn't actually have a background in fundraising at all, and so I went in, started doing a ton of informational interviews with everybody I knew in the space. We also had some very fortunate connections with folks like Alexis from Luxola, who introduced us to a lot of investors and that sort of thing initially. But a lot of it for us was, kind of to your point, was getting in and actually working with a lot of other startups and with a lot of companies, which gave us opportunities to go meet a lot of people and to actually have a portfolio of people who can vouch for our work. So. Yeah, it was a long, slow, painful process raising that initial seed funding. We ended up with Wavemaker as our lead, but 500 Startups was actually the first company to commit to the investment. So
I didn't know that.
That was a Casper deal. So that was a pretty exciting moment. Then we got that all put together, and then we actually it was. I guess technically it was November 2. It was just a year ago we did our initial seed. Topped up a little bit more, and we'll keep this quiet for now, but we'll make it 49 on your list out of 119 here shortly.
Okay.
Fantastic.
Yeah, so that's a great story, and besides getting cash into the bank from the seed investment, what were some of the other smart money features specific to 500 Startups that sort of attracted you? Like, was it working with Kylie, or what are some of the other synergies?
Yeah, just one thing, obviously, the kind of business person I am, I love people who run operationally efficient businesses and that sort of thing. For those of you who have not been through the seed stage funding yet, there are a lot of folks out there who, smart people, but just don't have their act together from a business perspective at all. Getting due diligence done takes forever. Getting things through legal takes forever, that sort of thing. Sometimes getting a check can take forever as well, and working with 500 startups. I mean, it's a professional organization. You ask a question. Vishal was on it and said, "Here's how things are going to go." That's how they go, which is from that perspective as a founder, I want to be back at business as quickly as possible, and that was huge.
Okay, could you share a little bit more about the due diligence? So in the media we hear a lot about investors doing due diligence on startups. What about the other way around?
Yeah, it's a great question. I mean, obviously, like with somebody like 500, it's a name brand company, so you don't need to do a whole lot of homework on it. But I definitely would say you've got to, at least, seed stage is interesting, right? Because we don't have a lot of numbers, and a lot of the investors we're talking to have a brand new fund and don't have a track record and all of that kind of stuff. So we definitely look for companies with a little bit more of a track record. But you got to keep your radar up a little bit. There are definitely a bunch of people floating around who are complete jokers. We ran into our share of them, and make sure you're picking the right folks to get in there and help your business.
Okay, so at this point I just want to open it up to the floor to see if there's any questions before we proceed with more questions for the panelists.
I want to add one more thing.
Okay.
I think related to seed stage companies, a lot of times, like what you mentioned, right, getting that first commitment is actually, for the whole fundraising process, once you get a first commitment from someone credible, the rest of your fundraising process actually happens a little bit faster. But getting that first commitment is the one that actually is the most painful one. Everyone seems to be waiting for somebody else. They're like, oh, who else is in your round? Oh, who else is committed to your round, right? So I think that what at least we try to do at 500 is we try to make a decision regardless of who else is around. And sometimes like that is in consideration as well. But a lot of times like we end up being the only ones going into a deal when a lot of other people have rejected it, and we will do that deal, right? Because we think that if we believe in it, it doesn't matter if other people don't believe in it, right? If we do believe in it, we need to stand by our conviction. So it does happen sometimes. But like what we try to do is try to give the yes, no as quickly as we can. And we tell them, hey, come back with something else, or we'll look at you later. We give that information very, very fast. We want to do the deal on the same call we did. Carousel was 25 minutes, I already committed, right? So we try to be very, very fast with giving a commitment at least, right? The paperwork and all that, we try and sort it out as quickly as we can. Sometimes those things take a bit of time, but the commitment is what's important for the founder to get commitments from everybody else, and then that way the round can be assembled very quickly. And what we also observe is that when you pick the right founders, they require less help. Like a lot of the worst founders, actually, they keep asking for all kinds of help because they think the whole world owes them something, and they need the help to succeed. Like it's very easy for us after a while to realize that for a lot of very good founders, they know exactly what needs to be done. Most of them, they need your money, and then they know what they need to do with the money. Very quickly, when they come back to you, it's like, hey, we're raising our next round. Right? So that is the cycle of the 40 over companies that's raised very quickly. More often than not, that's the case. That being said, there's duties for investors to help the founders as well. I'm not negating that, but I think for the most part, you pick the right founders. Usually they know what they need to do.
Okay, so building up on that, right, is there a specific strategy, or does it really matter for a startup whether they look for a commitment first or the investor first?